The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis, and welcome to the land of Camelot. Boy, yesterday surprised me, folks. I thought that the market could make a slightly higher high, but not 300 points in the Dow. That reminded me of one of those moves that said, oh, please let me in. I'm going to miss something. And I definitely have missed something, that's for sure, because that one really surprised me. We still have some divergences, of course, because the NASDAQ couldn't even get above the 78% retracement. The rest of the market was, Rocket City, and you just can't stand in front of it. We pointed that out yesterday morning, that once that New York Stock Exchange Index made a new high after that drive failed, there was really not a whole lot there. I mean, there was some divergence, of course, in the NASDAQ, but frankly, some of these others went, totally crazy. Now, the first chart that I posted in here today is the DAX going back over the past month. You'll notice here that we have a potential ABCD pattern completing, and if you'll check the latest chart that I've just posted in here, from our good friend from Upper East Side in New York, where all the rich people live. They have pointed it out that we have a real interesting pattern here completing at that level. Look at the exact number, as a matter of fact, 11,190. Hey, we got a caller. Shut the front door and raise her in. It's Mr. John from Philly. Hi, John. How are you?
Good morning, sir. How are you today?
I'm above ground, staying away from open graves.
In addition to marveling over the breakout rally in the DAX and the S&P, I understand you'd like to do some speculating in the hog market.
Oh, we did that about back in late October when we were making that big ABCD and the price of hogs was below. In fact, you were on the show with Rich Anderson when the price of hogs went below $44 a pound, which was below the cost of production. They got to 42 and have since rallied 16 cents a pound. So is that what you wanted to talk about?
I'm kind of thinking they're heading higher. How about yourself?
Oh, well, I just posted the Feb hog chart there, and if you believe in pattern recognition, you can see what happened 2 days ago. You gapped up, and then you took out the previous week's high on the same day with the market being almost limit up. What'd you do yesterday? You gapped up again, and it went up another 2.5 cents. So this market, you don't want to stand in front of this one. This one looks like it certainly wants to go a lot higher. We're now 13 cents above the lows that we made. So there might be some resistance, as you can see in Feb hogs, up around the 61.50 level, another 2 cents higher, and that's just the 61% retracement from the high in May. But what I would be looking for is to find a really nice buy pattern to try to get long this one, because it looks really interesting. What is the reason you follow the fundamentals, John? What is the fundamental reason for this? Because I can see the technicals, but I don't know much about hogs, and with Rich being out of commission here for a few days, I haven't able to check with him. But what caused this big move for 2 days?
Well, first, I'll mention the hog market has been in a bear market for 2 years now, and that has been driven by greater supplies, as is typical of bear markets, and this is very much a case of low prices being the cure for low prices. I posted for you the monthly chart of hogs, where you can see the peak in 2014 up at 135, and of course that was driven by a rampant disease that killed off lots of pigs in 2014, which cut supplies way back. And there was a containment exercise in 14 to try to eradicate the disease, and then in 2015, the medical profession did its fine work and came up with vaccines that cured the problem or at least controlled it. And when prices had gotten up to those 2014 peaks, of course, the trade was seeing gold if they could only increase their herd size and capture those prices. And, of course, those prices didn't last. The trade responded by increasing the herd size, and then prices plummeted. So everybody in the trade and the growing business, anyway, went into a losing position. And then the low occurred in October down at 40, which was a new 15-year low. In fact, it took out the bear market bottom of 2009, as you can see on that monthly chart. And one thing I'll just share with you about the futures market, of course, at the time of delivery, a futures contract will come close to meeting the cash market. But during the other times, anything up until expiration, the futures market, frankly, has very little to do with the current cash price. And back in October, when those hogs were making their lows at 41, the cash market was at 51. So the futures market was discounting much worse news, and cash never, I repeat, never got down to those levels. And the pig market, and I'll just share a note on the hog business. The business has become very sophisticated, very concentrated over the years. And one feature of that is that there is, or that the birthing and the growing functions within the industry have been totally separated. So pigs are given birth to and raised till just a couple of weeks in one location, shipped to others where they're fed to slaughter weight. So the pig business got very unprofitable. Started cutting back on numbers, and it's that reversal that's led to supplies, at least that we can see coming due in April, May, and June, will be significantly less. Hence, prices of the futures contracts are rising. That's kind of, in a nutshell, what's been going on there. So I'm with you, Larry. Every dip we see, I'm looking to be a buyer.
Well, the strength that we've had over the last couple of days has certainly been really amazing, that's for sure. What else do you like on the commodity front? We've only got about another few seconds here. Do you like something particular on the commodity front that's, putting your candle to the fire?
Well, just like you, I'm attracted to gold and silver for the very reasons you've been mentioning the past 2 weeks. So those are my key interests right here.
Hey, listen, thanks for joining us, my friend, and I hope to see you soon.
Thanks so much.
Thank you. Okay, folks, take a little break. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're taking a look at the DAX on a little bit longer time frame. As you can see from that little orange pattern there, that's equivalent to the one that we saw on a shorter term basis that I posted earlier. It's basically showing you that there's resistance at 11,900 in the DAX. Anything above 12,000, and 50, it tells you you're going to go, a great deal higher, as you can see from this. So you just have to, watch it because, these things explode out of here very, very quickly. I've had probably a half a dozen emails over the last few days asking me what the heck's going on in the market. And folks, I can honestly say with a great deal of confidence, I have no idea. I do know that it's being caused by the banking sector. If you take a look at the BKX, you'll see that the banking sector on a weekly basis, ever since the election, has just been in a just straight up move and gaps all over the place. These are usually ending type gaps, but how far it goes, you have to wait and see. Now, those of you that, trade the E-mini S&P, I wanted to just give you a quick summary here of what it looks like, because we've switched over to the March S&P now, and I just wanted to just get this up here to let you see where we are, because we have some a small resistance here. If you'll give me 1 second, and I'll get this up here, up at this 12. I'm getting the numbers wrong. Around the 2238 level in the E-mini S&P basis, the March futures. Now there's a 6 points difference between the March and the December. And so you have to remember now that we are trading March futures now. That's the lead option. So they both have equal open interest right now, but it'll start moving very, very quickly over to the March. So that's the best one to look at. Marshall's asked a question, is it a blow-off top? Marshall, this is the actual definition of a blow-off top when you see the market that we're seeing, both in the Dow Jones Industrial Average and in the Russell. Those are, in other words, markets that run, like the Dow has been up 18 out of 21 days. Go back and look to see how many times that happened. I think you have to go back to 1929. But, it's just very unusual, but that's it. It's just let me in syndrome. We finally matched the new high. The advanced decline line finally went up yesterday with that 300-point move in the Dow and finally made a double top with the advanced decline line, which had been divergence. But with yesterday's action, with that 300-point move, that shattered everything. The only divergence that's there is the NASDAQ at that 48, right around that 4,900 level in the futures. So that's the only one that is still outstanding. The S&P has broken it. All the others have broken it. So you really can't say that the divergence is there, because you've only got one thing now. And that was because of the one day in the market, and that was a big day. I mean, to go 30 points in the S&P without any news, that takes a lot of buying. And that's what sees what's happening. Now, let me talk to you about just a little bit about trading, folks. I'm giving you a couple examples. In 2004, I was asked to speak, and I spoke every year for many years at the traders conferences that we had in Las Vegas and New York. And this one was in New York. It was 2002. It was right after 9/11, and they didn't think anybody was going to show up, but they decided to put it on anyway. They asked John Hill, who's my mentor, who's 90 years old, still trading out of Hendersonville, North Carolina. They asked he and I if we would trade together for the whole morning in front of a crowd, trading live with real money. And so we said, sure, we'll do it. So we started at 6:30 in the morning. The conference didn't start till 8, so we didn't think there would be many people there. But there was about a room held about 250 people. There were probably 200 people in the room. And so we started trading. After the first hour, John and I were 0 for 5. We didn't have any winners at all. We were down $600 or $700. We were trading, 2 and 5 minute charts. And the people, John looked at me and he said, Larry, he said, the good part about this is we're going to be able to go over to Cantor's and have one of those wonderful New York breakfasts. And I laughed. I said, yeah, I know, because we figured everybody would leave the room. What happened was some people went out into the hallway, and they would pull their friends in and say, hey, you got to come in here. They got these two professionals in there that are losing their butt. It's really funny to watch them. Well, after about another hour or two, things picked up a little bit. And then we had one of those runs where you just couldn't do anything wrong for the next 3 hours. And we ended up being up about $3,200 on the day after starting, being down about $600. The reason why I tell you this, folks, is because, someday it's chicken salad, someday it's chicken poop. It just depends on how you mix it. And you just got to keep making the salad, because you don't know which ones are going to win. So that's the whole key. The second one was back in when Mark Douglas first moved here to Tucson from Chicago. One of my very, very close and dear students, Peggy Mackay, who was an attorney, she wanted to do a book because she only lived about a mile. She lived over by Arch, over in the Canyon Ranch area, and she wanted to do a book where she could follow me every day for 30 days. And I didn't want to do anything like that, but the publisher said, hey, this is a great idea. And so she came in the office every day for 30 days and documented everything that I did. That's the book, what is it called? Private Thoughts of a Trader. Private Thoughts from a Trader's Diary is what it was. That was every trade for a 30-day period. And I had some terrific runs in there. I had a few bad runs, but a few really good runs during that month. But the most amazing thing was I had been on a streak of 11 straight winning days. I think I only had like 2 or 3 losses, or maybe 4 during that whole 11 days. And I was really excited to see this day coming up, because I showed Mark, I said I had 5 setups. I was so excited. I was showing him how each one of them was going to set up, and I had Gartleys and butterflies everywhere. And he puts his hand on my shoulder, standing behind me, and he said, your streak ends today. And I turned around and I said, what the? I won't say the word because Tom will be upset. I said, why are you putting the kiss of death on this? He said, I'm not. He said, I'm just feeling the energy that you're having. He said, your greed index has been hit. You know what? I was 0 for 5 on every one of those trades, lost that day. So just remember, patterns win, patterns fail, but on a long run, they're going to get you to the promised land. But when you've got markets that are going nuts like this, and believe me, this one is definitely on the vision of I don't know, vision's not the right word, but it is definitely an unusual unusual market. We haven't seen much like this, very, very often, coming off of a bottom off of the election. So that was a great buy down there overnight if you were awake in the middle of the night, but no one thought it was going to go up 21 days in a row like we did on some of these markets, like the I think we were up 15 days in a row in the Russell and 18 of the 21 in the Dow Jones. So that's it. Now, even the New York Stock Exchange Index, broke out on Monday. We talked about that on Monday, a Tuesday show, the fact that it broke the three drive pattern that was there very, very, quickly. As soon as it made new highs, it was telling you that you certainly didn't want to, stand in front of that as it was happening. And now, if we take a look at this New York Stock Exchange Index, you'll see that we still have a little more to go if it wants to, because we broke out, we gapped up again, had another big day as we would have with the other. One second, I made a slight slide here. Stay tuned for Shane Smolian.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks. We have Shane Smolian, the wolftrader.net on the line. Shane, are you there?
I'm here, Larry. Can you hear me?
Oh, perfectly, and we certainly want to hear what you have to say. You've had this thing pegged pretty well as far as the Fed and what it's been doing and the upward momentum. You want to go ahead and start out? I posted your picture of Janet pouring gasoline on the fire, and you said to focus on the fire and not the gasoline. What do you want to
What
explain that?
can you go to that picture real quick just to show them?
Sure, sure. Yes, I certainly can.
Thank
I'm
you.
having a little trouble because it's a little too big for my
Oh, okay.
computer, but I'll put it up here so the folks can see it. And then if anybody wants to see it, if they'll, email me, I'll send them the whole slides. But is that close enough? Because I think we can't see your
Yeah,
picture
okay.
here.
Yeah,
Here,
so
I'll
the
put the
idea
picture
here
up
is that
too.
that's actually a picture of Yellen. If you hold down the control key on your keyboard and you scroll the mouse, you can zoom out a little bit on that.
Hold on. Oh, I'm not that good. No.
Okay, but the idea of this is the following, and I put this picture in just so people would understand. In traditional investing, when you look at a market rallying, most people think of it like a campfire, and they look at the fire and they look at the logs in the fire and they say, well, the fire has been burning for an hour, 2 hours, and these logs can only burn for so long before the logs turn to ash. And so most people are looking at the logs in the fire and they're like, wow, this fire it can't keep going forever. It's not going to keep going because these logs, the fuel has to burn out. But what people aren't focusing on is they're not focusing on the Fed pouring the fuel into the fire. So if you can understand this concept, you can save yourself a lot of pain and suffering because in a traditional sense, when you look at a chart and you look at a market rallying and you see these double tops and these heads and shoulders, in traditional markets, that stuff used to work. But in these types of market conditions, that stuff doesn't work anymore. So you have to look at what the Fed is doing, and that's the thing to focus on. This is an actual chart here that I posted. This was from 2012. And I was just showing an example here. You have these counterintuitive markets. And what happens is you get these up cycles and these low cycles. And when the Fed is active, the low cycles may actually make a higher high. So you may actually have the market may actually be pushing to a high at the bottom of a cycle. And in traditional Elliott terms, that's called a running cycle or running correction. And
Okay.
so it's very counterintuitive and it baffles people because if you just looked at that chart before that cycle low, you might say, wow, that looks like a top.
Mhm.
So what we actually have right now is we had a similar situation. We had I know. Can you scroll a little bit to the bottom of that chart?
Sure. Where it says very strong Fed.
Yeah, just scroll down and then so they could
Oh,
see, and then we'll go to the top.
okay. You'll have to
Okay,
show me how to
so
do this another time because I usually I can get them all at the same time, but for some reason they were too big this time.
okay. Oh, there you go. Okay, so what I would like to show there is in the actual chart. This is right before the election, so the market was going down, and curiously enough, the Fed was very weak into this period. Then it spiked up. Now, the interesting thing was this was actually a cycle high right here. And so we had the overnight drop and it dropped down to that label A, but then it started rallying again. And so it was rallying into a down cycle. So
Uh-huh.
when, if you could scroll up just one more time to the top.
Okay. Okay, I think I got it right now. Hold on just a second here. There we go. Is that what you want to see?
Yeah, perfect. So this is another example of a running correction. And so it's very counterintuitive. This was supposed to be a down cycle, so that this B wave here is a very strong B wave. If you're talking about a 3-wave correction, I just put this in Elliott terms so people could understand it. What actually happened is the market rallied super strong into this. It was supposed to be a cycle low. So if you see there, there's two different cycle lows, and those arrows are B and C. And you
Hmm.
can see here that the market was actually pushing into highs again at a cycle low. And so this is not, to me, this is not surprising at all that this market broke out like this. And I've been talking about this. I post this every day for the Twitter followers for my full service. I post this every day, and I've been saying I mean, we've been in a strong buy this whole time, and I talk about this, that the Fed has been very active, very strong, and I don't see anything. I don't see anything letting up. I mean, we thought that, we didn't know what's going to happen when Donald Trump got in, but I started thinking about it. And is Yellen political? Yeah, she probably is. She's probably a Democrat. But in the end of the day, I think, and it really came to me clearly, is that Janet Yellen cares about Janet Yellen, and she does, and she cares about her legacy. And so no Fed chairman or chairwoman wants to reside over a market that's going to collapse. And so I really don't think she's going anywhere. At first I thought that maybe Trump might, try to push her out and all this stuff that he was saying. But, when we look at Trump is a Gemini, but his rising sign is Leo. So Leo is a fixed sign. So Larry, you're a Leo, I'm a Scorpio. We're both fixed signs. So we're very systematic. We're set in our ways. We have a routine, and we kind of just follow the routine. But mutable signs are not like that. And Gemini in particular, they change all the time. So mutable signs like a Gemini, they're deal makers. They want to come to the table and change and negotiate and go back and forth. So Trump puts out this appearance that he's a fixed sign, build the wall, and then Mexico says something. He's like, now it's going to be 10 feet higher. But in reality, he's a mutable sign, which means that he's going to change all the time and adapt. And Gemini is famous for being one person one day and then another person the next day. Mm-hmm. So when I started looking at when he met with Mitt Romney for Secretary of State, I started thinking to myself, he doesn't care. Like, he really does. Like, he wants to sit at the table and make a deal. So all of this was to set up a deal. So I don't think he's going to push Janet Yellen out. I think he's going to sit down with her. I think they're going to talk, and I think she's going to stay put. I don't think this is going to end, and I don't see this ending, this rally. I don't see it ending for months and months and months. I mean, I don't, and the reason I say that is it's not because it's so high. If I looked at the price alone, I would say, wow, this thing's at a top. It's just going to collapse. But we know what the Fed is doing. I track it every day. I put it in the newsletter. We know the purchases that are happening. I even posted at the end of the letter the purchases that the Fed is making. Because some people write me and they're like, well, there's no evidence. I've talked to XYZ trading service or, ABC, whatever, and they say there's no evidence of the Fed. And the reality is there is evidence. And I actually posted it in the newsletter. I posted all the purchases, the mortgage-backed securities. It's approaching $400 billion this year. And this is a very real thing. I mean, this is not a speculative theory that I have. This is data. This is like hard data that we plot. And she's only ramping it up higher. The fuel is going even more onto the fire. So I don't see this thing turning down. There's like, what's going to stop it, Larry? Like, I don't like, there's nothing in my mind right now. I mean, she's going to raise rates on December. She's probably going to raise rates in a week. But other than that, I mean, there might be a hiccup there. Go ahead.
I don't think that'll mean much, do you?
Well, it might not, because it's already priced in, right? Everybody expects it, right? So it might go down a little bit, but I mean, what's going to stop it? I mean, I'm trying to think to myself, nothing's going to stop this. I mean, I don't see it. I don't see anything stopping this for at least 9 to 12 months. I just don't see it. We had a major year. Well, we'll catch up after the break. I'll tell you about that in a minute.
Okay, we'll be right back with Shane Smolian of wolftrader.net.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, and we have Shane Smolian, wolftrader.net, and we're looking at your transit chart, my friend. You want to explain to us what you're looking at here?
Sure. This is one of the tools that we use to forecast the markets. Now, in the newsletter, I actually take eight or 10 different aspects and put it into like a master astro cycle. But this is just one of the things we look at. And there was actually a cycle low, like I was talking about, at the end of November, and it rallied into that low. So when it rallies into a cycle low, that's a very strong sign that we're going to have a vertical breakout. And that's exactly what happened. And so if you take a look here, it goes up through like right into the Fed meeting, which is kind of curious. That's kind of a peak point, and then it pulls back. So it's possible that it rallies right into the Fed meeting and then pulls back, or that could be, it could be a shorter term top. I don't think so. I think it's going to keep going up at least through December, because in December, the Fed has left a pattern now. They've been doing this since 2009 with the juice, and I've made a cycle, an annual cycle of that. And right before the end of the quarter, they tend to ramp up the juice. And so that's December. So that's like right now. And then we also have the positive seasonals. So, I mean, this month, everything is put together right now for an ultra bullish month. And so the Fed ramps it up, and then they stop around December 1st again. They pull back. And that's when we saw the decline last year. So I think the next chance for a pullback is probably after January 1st, probably. We'll see how they react to the Fed on, next week. That's the only part of the month I would say is, tenuous. But overall, I don't see anything here other than bulls running through the streets. I mean, there's just nothing here that says it's going to go down, and from what I'm looking at.
Well, it's certainly been spot on. And also we had Bill Meridian on Tuesday from Vienna, and he said pretty much the same thing, that we had this really strong bullish bias into the first several weeks of December, which lines up very closely with your transit charts here, and also the Fed timing coming in. So, I mean, I don't know why they wouldn't raise rates this time. I mean, my goodness, they got stock market at all-time highs. There's no risk, because even a small correction is going to be, a breather for somebody. So I don't know why they wouldn't raise it. What I don't understand, Shane, and maybe you could explain it to us, is why they keep, priming the pump when the pump is going up pretty much on its own.
I think there's an underlying problem with the banks and the lending right now, that the lending is not what they want. And so what they're trying to do, especially with the mortgages, is by purchasing these mortgage-backed securities, there's two things going on. Okay, so the primary thing is, let's pretend like you're a lender, and you want to lend, but you don't have the cash to do it. And it's tight. You don't want to do it. So the Fed's like, okay, listen, Larry, I'm going to take these securities that you're holding. I'm going to buy them from you. And I'm going to give you whatever it is, billions of dollars. And now you can take that billions of dollars and you can lend it to people. Here's some liquidity to lend it. And so now the Fed holds on to that security. And then the Fed turns around. Now, so that's one way. So all of a sudden, you were holding all of this, what you would say is toxic, stuff you're worried about, okay? Now you have cash in your hand, just poof like that. The Fed just gave you cash. You're a lender. Now you can lend to people. Fed's holding these securities now. Fed's like, and so I made an example today on Twitter. Like the Fed is like enterprise rental car, okay? They can buy all these cars, right? Okay, so the Fed technically can't buy the market, but they can buy securities, right? They can buy mortgage-backed securities and treasuries, and so if you're a rental company, you put all your cars on a lot, right? And so the Fed puts all these on their balance sheet, right? Well, they don't just sit there. So if you're enterprise rental car, do you want all your cars sitting on the lot? No. You're going to lease the car out, right? So then the Fed turns around and they lend all of these securities out. Now, in the last slide, I actually put a picture there talking about the ECB is starting to do this now. And they actually put a quote there, that they lend these securities out to people to invest. So they straight up admitted what they're doing. They straight up admitted it. So you've got two ends of this. You got the first phase where the Fed's pulling the mortgage-backed securities off the lender's sheets. Now the lender has cash, and the lender can lend homes and all this stuff. The Fed is holding this like enterprise rental car, having all their cars. You don't want all your cars sitting in a parking lot. You want to rent them out. So the Fed leases all of these out, and then the people can go and invest it. So it's kind of like a double-ended scheme here. And this is how the Fed pushes the money in the market, because it's not technically they can't buy the market, but they say, okay, well, you know what? I have these cars, and here you can lease the car, and when you have the car, you can use that as collateral to buy stocks, or in a traditional account that would be a margin account, right? So if you have a margin account, like let's say you own U.S. Treasuries in a margin account, you can use that as collateral, right? That's collateral. So you can use that as collateral to buy securities, right? I mean, it's like 80% marginable or something. So that's what's happening. So it's happening on both ends here. And now Europe is starting to do it. So when I saw that Europe is starting to do that, then now you got to say, wow, this is even more bullish, because they're figuring out ways to increase the liquidity. It's actually very brilliant. It's a very, very brilliant thing that they're doing. They're figuring out on both ends, on the purchasing end, and now they hold these assets and they turn around and they push them back out on the other end through the lending. So I don't see it ending. And the one thing I put it on the newsletter too is that, these are real purchases that are happening. I mean, it's like almost $400 billion a year. They're not going to the balance sheet. And when I saw Janet Yellen in Congress, the congressmen were talking to her like that she's not purchasing this anymore. They were asking her questions like, well, when you purchased this in the past, did you get a good market rate or something ridiculous? But it's like nobody looks at their published data daily, which shows that they're still doing this. They're still doing the QE. They're still pushing the money out. And so as long as that continues, the market's going to go straight up, and there's nothing that's going to stop it from going down. And so when I focus on the fuel, not the logs on the fire, when I focus on the fuel, this all makes sense now. And in terms of the Bradley, I know that's the next slide that's below.
Sure.
The Bradley's running up for 9 months. So
this is the Bradley for 2017, late this year, 2017, correct?
Correct. And so,
yeah, okay.
When we look at the Bradley here now, some people will say, well, the market rallied during the last down cycle. That means it doesn't work. No, that's not what it means. It means that you look at the up cycles to focus on. So for example, the Bradley here is running straight up. I mean, this is one of the most bullish things I've ever seen in terms of the Bradley. I haven't seen it run up this long. It's going up for November, December, January, February, March, April, May, June, July, and then it peaks in like June, and then it has another peak out in August. So we're looking at at least 9 months here. And and that's bullish. So when that's bullish and the Fed is bullish, you've got a situation for some very, very strong markets. And one thing people never consider, we haven't seen GDP growth above 3% the whole time Obama was in presidency. I don't really blame him. The global economy was depressed and all of this stuff. But people haven't asked the question, what happens if we actually get a recovery? What happens if we actually get real job growth, real sector? I'm talking about, high wage growth. I mean, you had like 95, like a third of the workforce was still not even in the workforce. Like they're still not even working. So what happens if we get a recovery? You're going to get an exponential market.
That's what we're having right now. Listen, stay tuned, and we'll be back with you in just a minute, okay?
Great, thanks.
You bet. Shane Smolian, wolftrader.net.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we have Shane Smolian of wolftrader.net. We're talking about some of these transits that are happening in the market along with the Bradley model. We have a question from one of our listeners, Shane, about the work that you did with the speed of Mercury. Have you found out anything that still, I mean, you had some really good results to begin with. I was just wondering if you still look at that.
I do. That's a big part of the Planetary Speed Index, and I didn't post that here. It's in the newsletter. You guys can see that. I have a bunch of different, I have many different cycles that we combine in there. But the big part of that speed index is Mercury because it's so close to the Earth. Mm-hmm. And so, yeah, it still works. It's got to be in the relative context, though. If we're in a bull, you got to be really playing the bottoms, not the tops. So the next subtop is around the 11th of December. I want to say one point too. You were talking about your trading story earlier on the show with your friend, and you had those trading days where you had the 5 days. And people out there listening, when I went to see Larry in Tucson, he was trading 4 markets, and 3 of those markets when I was there, he made very good money, like big money. So, these patterns that he talks about do work. I just want to say that what we're dealing with in the S&P is something it's a different animal right now. But what your friend was talking about, like your sentiment index, he was saying that your greed index was high. And people used to use that in the market. They say, wow, the sentiment is 90% bullish, or 95%, we should short now. That doesn't work anymore. When the Fed's in there just pouring money in, it doesn't matter what the sentiment is. It's just going to keep going up. So that's why people are so baffled right now. Like, things that have always worked for like hundreds of years don't work anymore, because there's somebody there pushing gasoline on the fire, and they're pushing money into the market from two ends of the spigot, and they're still adding to the balance sheet, and they're putting that out there, but yet when they post their quarterly report, they don't even post that it's on the balance sheet. So this is a real thing. I mean, these are real. This is a real force, and something for people to just understand that it's a different world now with this Fed.
I want to compliment you on saying that Trump was going to win in a runaway. You had it nailed, my friend. Thank you very much for joining us.
Okay, have a great thanks
You
a lot.
bet.
Take care.
Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.